I was just going to follow up on that question, Warren, which was about a year ago. We had asked you about Michael Bloomberg, and you had said that if he ever entered the race, he was somebody you would support. Would you support him? Is he your candidate?
Well, I would certainly vote for him. I don't think another billionaire supporting him would be the best thing to announce. But sure, I would have no trouble voting for Mike Bloomberg.
And what do you think his chances
are? Well, I don't think I want to get into handicapping the race, but I would say this in terms of Sanders. I actually agree with him in terms of certain things he would like to accomplish. I don't agree with him in many ways, but in terms of the fact that we ought to do better by the people that get left behind by our capitalist system. I don't think we should kill the capitalist system in the process. I think we should make sure that the golden goose keeps laying more eggs, and it's worked wonderfully since 1776. But it doesn't work as well for people whose talents aren't really geared to a market economy. And I don't think anybody should be left behind by an economy that has over $60,000 of GDP per capita. And so I'm a big fan of increasing the earned income tax credit. And I think there should be some changes made. But if given a choice, I would certainly vote for Mike Bloomberg as opposed to Sanders.
There is a plan. Let's talk about some of Sanders' plans. You said you agree with some of what his intentions are, but let's talk about some of those actual plans. One of those plans would be to give 20% of company stock to employees and put workers on the board. What do you think about that? That would be for any company, public company, that has more than $100 million in annual revenue or a $100 million balance sheet.
Well, I don't want to get involved in evaluating his whole plan, but I think that would be a particularly bad idea. Because? Well, I don't think that. I don't think putting 20% of the capitalists on a labor union is a good idea either. And I think the market system works very, very well in terms of developing more goods and services. I mean, when you flew out here to Omaha, if you'd flown out here and you wouldn't have been able to fly in 1776, you wouldn't have seen anything. Everything you see is the product of a system that's worked like nothing's ever worked in the history of the world. So I do not believe in messing up our system of developing output. I do believe that anybody who's willing to work 40 hours a week and has a couple kids should not have to have an extra second job. And I believe in having a higher income per people, not necessarily a higher minimum wage, but I do not think it's at all unreasonable that the income tax credit produces at least $15 an hour, maybe higher in certain areas. So I'm very much in sympathy with the fact that Senator Sanders believes that a lot of people are getting left behind and through no fault of their own. And there's all kinds of aspects of capitalism that can need, in some ways, to be regulated. But I don't believe in giving up the capitalistic system. All right, let me slip in some questions that viewers have written in on this front. Michael Blank writes in, please ask Warren if he thinks the market will sell off if it becomes clear that Bernie Sanders will win the Democratic nomination. I think I normally would never make a comment on something like that, but I would say that if you had Sanders and a Democratic House and Senate, or if you had Trump with a Republican House and Senate, there would be a significant difference. But I don't think I would necessarily vote on what, in fact, I know I wouldn't vote on what I thought necessarily would affect the market the better. I think it's a very poor yardstick. I would not want to cast my vote in a presidential election based on which would be better for the market in the next 30 or 60 or 90 days after the election. But your reservations with Bernie Sanders, I assume, come with your concerns about what it means for the economy, not over 30, 60, 90 days, over a much broader period of time. Certain aspects of the economy, certain things I'd like to see done. I would like to see the earned income tax credit change dramatically upward. Alan Bucky writes in a letter. He says, if Michael Bloomberg becomes the Democratic candidate, would you consider buying his company? No. I can give you a categorical answer to that.
Because of the price, because of the...
There'd be somebody who paid more.
Warren, we've talked this morning about the coronavirus, but there are people who are waking up across the country now, kind of tuning in at this hour. So maybe we should address this again. With the markets indicated down 750 points, with concerns about coronavirus spreading and now worries about what that will mean for the global economy this year. I know this is not something you look at a day-by-day basis, but how do you kind of wake up and read this and think through it?
I don't think it makes no difference in our investments. I mean, there's always going to be some news, good or bad, every day. In fact, if you go back and read all the papers for the last 50 years, probably most of the headlines tend to be bad. But if you look at what happens to the economy, most of the things are extremely good. I mean, it's incredible what will happen over time. So if somebody came and told me that the global growth rate was going to be down 1% instead of 0.1%, I'd still buy stocks if I like the business and I like the price at which and I like the prices better today than I liked them last Friday.
Do you like prices better today? Will Berkshire be buying stock today?
Well, we'll certainly be more inclined to buy stock today than on Friday. Yeah. Anything we were buying Friday, we will be buying today, and feeling better about buying it.
You know, one of the things you talked about in the annual letter was stock buybacks of Berkshire Hathaway.
Right.
And for the first time, you told people to call Mark Millard in your office outright if they have $20 million worth of Berkshire shares and they're ready to sell.
Right.
That's a really unusual move. Why did you do that?
Well, we did it because it's very hard to buy blocks in the market of Berkshire. We practically never see blocks, except we do see them from estates or occasionally. But if somebody's going to sell $100 million worth of Berkshire, and we want to buy it, we'd like them to call us, and if we're buying at that price level, we'll buy it.
Dan Mahoney actually wrote in with a very similar question. He just said, "Is it hard to buy back the shares?"
Yeah, it's hard to buy. It's harder to buy back Berkshire shares than, say, Bank of America is buying back their shares. Bank of America bought back 8 or 9% of their stock last year, and they can really do it without moving the market. I mean, Apple's been buying back a ton of stock. They were buying stock at the same time we were buying stock. But it was easier for us to buy Apple stock, even though Apple itself was buying a lot of stock, than it is to buy Berkshire. Berkshire is, well, it's held by people that really plan to keep it. I think the amount of speculation in Berkshire stock is relatively low compared to most stocks. And so well, we bought $5 billion worth last year, but that's only 1% of the market cap. And I would say with a great many companies, you can buy 4 or 5% of the company fairly easily a year without disturbing the market. American Express has been buying it every year.
So with you putting out an ad in the letter to shareholders, does that basically mean you are eager to buy more shares back?
Depends on the price, but we'll let anybody know if we told them to call us before the opening or after the close, and only with blocks, and only if they're ready to do business. Now there'll be a few people that probably try and call just to see whether we're buying or not, and we will not show a lot of patience with those people.
Let's talk about shares of Apple. Both from you just mentioning it with the share buybacks, with it being such a huge holding of yours. You've got more than 5.3% of the company right now?
Yeah, I think it's 5.6, but
5.6%,
and it goes up every day.
Let's talk about what
buying.
We've seen with the slowdown with the coronavirus, because Apple is one of the companies that has said it's going to have an impact, not only with the stores that they've closed there, with the behavior of Chinese customers, but also what happens with the supply chain.
Supply chain, sure.
How do you read through any of that? What are you hearing? Do you know more than we do on that front?
No, I don't know one thing more. I may see Tim Cook at the annual meeting. I see him in Sun Valley once a year. No, I don't think I've placed a phone call to Tim Cook in 2 or 3 years. I mean, all kinds of things are going to happen to Apple over the next 10 years. The real question is, what is the degree of pervasiveness and strength of that product 5 or 10 years from now? And I don't think of Apple as a stock. I think it's our 3rd largest business.
It's also a high-flying technology company. It's one that's been at the forefront, but you've said in the past you didn't buy it because it's a technology company.
I think it's a consumer product. In fact, I think I said this on the program a couple of years ago. I mean, obviously it's a consumer product company that uses technology, but we've got a lot of products that use technology at Berkshire. But it's an incredible company. and I should have appreciated it earlier.
There's a question that came in from, I guess the handle is GPG. This is a question that came in on Twitter, and the writer asks, you've said that you can do fair value estimates of companies you follow at any time in your head. So please do one now for Apple. What went wrong with your estimate for IBM, and how is that miscalculation different than for Apple?
IBM's an entirely different business than Apple. I mean, Apple doesn't resemble IBM anymore. It resembles See's Candy in a way more. I mean, it is a incredibly useful product to people that grows more useful as the number of people are involved. I mean, it's really interesting. You know, we call them smartphones. If you go back and look at the old telephone, that was an incredible, useful product. It changed my mother's life and my dad's life. It changed lives in every way, and they took a long time to become pervasive, and it was very expensive initially, but it changed the world. And the smartphone is part of hundreds and hundreds of millions of people's lives in all aspects of their lives. It's used as all kinds of utility. It's a consumer product.
Are you a consumer of its products at this point? You've had a flip phone for forever.
I'm glad you brought that up. I am now using, not very often, but I'm using the latest model, and I'll give you a little preview of our movie for the annual meeting. We haven't done it yet, but it will probably show me crushing with my foot my old flip phone while cozying up to the new smartphone.
When did you get the smartphone?
I've been given several of them, but including by Tim Cook.
One finally stuck?
What, pardon me?
One finally stuck? You're actually
yeah, absolutely. No, my flip phone is permanently gone. The number's been changed to my new phone. Wow, yeah.
That's impressive.
I mean, you're looking at an 89-year-old guy that's barely beginning to be with it.
What do you like best about the phone? And what do you like least?
Well, I don't use all its facilities like most people. I mean, most people are living their lives around it, and I use it as a phone.
As a phone and nothing else.
I use it as a phone.
I don't like it when investment bankers talk about EBITDA, which I translate as earnings.
That was Berkshire Hathaway Vice Chairman Charlie Munger about a week and a half ago when he was speaking at the annual shareholders meeting for his other company, the Daily Journal, answering questions, giving his usual straight answers when things come up as questions. Warren, that was Charlie talking about EBITDA earnings, calling them BS earnings, although he said it a little more explicitly. You, in your shareholder letter for Berkshire Hathaway, also wrote about how you don't believe in GAAP earnings. How do you guys come about this? What do you think? You still have to report these numbers, but you're basically telling shareholders don't listen to them.
Well, it's two different principles. I mean, the GAAP numbers, which show us earning $80 billion, which is more than any company's ever earned in history. And we explain why that really isn't the relevant statistic, because a lot of that was just the stock market going up, which now gets counted in our earnings. And Charlie was expressing an opinion we both have. I mean, Charlie's the shy, reticent one of the pair, but Charlie is the best partner anybody could possibly have. We've been partners now for 60 years, and you could not have a better partner. He, at 96, a woman, since that meeting actually, in the last couple of weeks, a woman said to him, "Is it true, Mr. Munger, that you have 8 children?" And Charlie's reply was, "So far." So Charlie is very much an active partner, we'll put it that way. Next time I see him, I'll get an update on that to see what so far still going.
Okay, let us know what happens with it.
I will.
You know, we watch pretty closely Charlie's shareholder meeting for the Daily Journal.
Sure.
We send cameras out, we watch it. I've been out myself. Do you watch that meeting too to see what he has to say?
I watched it all on YouTube afterwards, but my sister and one of my good friends and my niece were all there, and no, I end up watching it, and I actually end up reading it usually too. I wouldn't miss it, but I don't go out for it.
Was there anything he said that surprised you this time around? And I'm just looking through some of his.
Actually, nothing Charlie says can surprise me.
Was there anything that enlightened you or changed your opinion on something? Maybe something.
No,
that
but I learn from Charlie every time I talk to him. Charlie has the best 30-second mind in the world, so I can go to him with a new question, a new problem of any kind, and it goes through about 8 filters in his mind in 10 seconds, and he gets to the essence of any problem. There is nobody better to talk to than Charlie at age 96.
Is there anything you've talked to him about recently that you might be able to share? I don't know if you want to share the conversations you guys have privately, but anything where you've bounced something off of him and he...
Well, we talk about a lot of things, and we talk particularly about things we don't know the answer to. And we find the whole scene so interesting, whether it's politically or economically or the world. I mean, it's incredibly interesting to us, and we're particularly interested in each other's view, although I think I'm more interested in his view than he is in mine. And that would be a correct decision to make for somebody overhearing us.
What's something you guys don't understand right now?
Oh, we do not understand at all what the outcome will be in a world where 13 trillion is being borrowed at less than zero, and even Greece went on short-term. I think Greece, the 10-year bond is 1%, for example, and at the same time, in this country, we're having, under very good business and market conditions, we're having a 4.5% federal deficit, and nobody is concerned in the least. And we're talking about massive new programs and so on. Everybody talks about how they'll pay for them, but they really, the deficit's going to widen. So we don't know what world comes out of something where you start with extremely low interest rates and high rates of growth, and then what you do for stimulus later on. But the whole game, I mean, the game always unfolds differently than you expect, and that's what makes it so interesting.
You know, the 10-year, speaking of these low rates, just a little bit ago hit its lowest yield since July of 2016 this morning. I think it was 1.377%. We're back at 1.396%. But 10-year rates below 1.4%.
Yeah.
Would you have anticipated this?
It makes no sense to lend money at 1.4% to the U.S. government when it's government policy to have 2% a year inflation. I mean, you've got the government is telling you we're going to give you 1.4% and tax you on it, and on the other hand, we're going to presumably devalue that money at 2% a year. So these are very unusual conditions, and classical economics, it doesn't appear that, what do people do under such circumstances? Does everybody buy a mattress and stick their money under the mattress or what? And it particularly seems unusual when the world is generally prosperous, but the game is always changing, but it always looks logical in retrospect, and it always looks puzzling prospectively. But there's always things to do that make sense too.
Like what?
Well, I hope that's what we're doing. It's buying good businesses at decent prices, whether all of the businesses or parts of the businesses through the stock market.
You told me a year and a half ago, maybe longer, that when you went out to try and buy whole businesses right now, it just looks too expensive, which is why you started buying pieces of companies, more stocks, putting money in places like Apple. Is that still the case? Is it still a huge premium to try and buy a company outright?
There's quite a premium, and part of the premium is because you can borrow so much money so cheaply in buying those businesses. Obviously, you can pay more for a business if you can borrow a very high percentage of the purchase price and of the future cash flow committed to it, and you can borrow at low rates with very little in the way of restrictions, restrictive covenants or anything of the sort. I mean, that's going to bring higher prices, and the demand for that is huge, and people look at those rates on the 30-year or the 10-year, and they say to themselves, gee, I can't live on that, and so they stretch and buy poorer credits. But that's just part of the human cycle over time, and that leads to something else, and that leads to something else. In the end, if you own good businesses at the right price, you're going to do fine.
You're often quoted as saying that you don't know who's skinny dipping until the tide goes out, who's swimming naked until the tide goes out, whatever it may be. You get the sense with a high tide right now that there's a lot of skinny dipping taking place?
We're certainly we're allowing people to borrow money on much weaker terms than we were 5 or 10 years ago. You couldn't borrow money at all there for a period of 10 years ago. I mean, you literally, Berkshire couldn't borrow money. I mean, everything stopped. And now the pendulum has swung dramatically, and yet we still have, we have very, very, very low rates. It's hard to believe that 10 years or 20 years from now we will have a substantial continuation of negative interest rates. But I've already seen things I didn't think could happen. So who knows what could happen? That's what